Good late, cloudy, dreary ending to a dreary rainy day in late spring, mid-May in the greater Bloomington metropolitan area in central Illinois. This is Vincenzo's Gold Crypto Investing, where you like, subscribe, and share, brother, for a one-of-a-kind, company-made, probability-based Targisian trading alert. This again, yes, a funny intro, is a trading alert to look at a subscriber request at Rivian, son. Buy that shit. Rivian, can you fucking believe he's doing a Ethereum chart now? Oh, I can fucking believe it at Vincenzo's Gold Crypto Investing. Where's fucking Ethereum at right here? Here, Litecoin. Ooh, having a rough day today. Let's take a look at our little chart here. Clean this shit up right here. Right, alright, zoom out. Let's bring back our growing favorite and subscriber requested and 7th video in a row, the eraser. I was demanded by the subscribers, and the only demand from the subscribers so far was, we demand more eraser. Well, here you go for the 7th video in a row. Eraser checking into the program. Congratulations and thanks for the participation, Eraser. Look how good that Eraser is. Bam, 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 bam. Just firing away missiles. Bam, bam. And that's just one more of the tools we have here that help you stay 2 steps ahead and sidestep the criminal gangster cartel that have hijacked the United States federal government in order to fleece and heist and shiest the retail trader. And Jim Harbaugh, again, if you're listening, please like, subscribe, and share my channel, and I will help you with a probability-based way to take down, sidestep, audible, detect the blitz on the blind side as he creeps in on a late defensive switch, and you bring your wide receiver from the right in to protect your blind side, and you bootleg it to the right and you throw it down the field to a wide open streaking tie streaks for a 48-yard touchdown, Michigan, right? It's that simple, Jim Harbaugh. Like, subscribe, and share. But enough of my nonsense and rambling, and already, if we take some of these lines that don't apply and make them smaller, my subscribers can already see what's going on here. We'll get rid of these. Do any of my new subscribers see it? One of my subscribers, please, because this is one of the things I am honestly going to put on a bumper sticker or a coffee mug, but it would be kind of big, more like a shirt, is, wait for it, pumping price. Go up to our little size tool here and make it bigger and easier to see. Pumping price, bullish, rising. You see where the volume starts, rising volume, bullish. Right? And you kind of peaked in volume right there, and you peaked in price right there. You see that? Because price precedes, or volume precedes price, or price follows volume. So you're bullish, check. You got that? After that, in the daily time frame, you crashed in volume, and up and sideways consolidation. Now, any of my subscribers that aren't a jabroni like them Doge people, what does an upwards and sideways consolidation mean after a pump and crashing volume? Very, very bearish. Let's pour a little YouTube favorite and channel favorite drawing tool. That's very, very bearish, and is often, but not always, a sign that the buyers up here are being exhausted. And you start forming a rounding top as the bears or the sellers start taking control of the market, and you start to come down. And you say, well, where the fuck's the targeted move out of that shit? Well, if you just calm down, get your notepads out, and sidestep the criminal gangster cartel like Jim Harbaugh has not been able to. Yeah, that's right. The Ohio State University has infiltrated the trading market to heist and fleece the retail investor. But when you like, subscribe, and share to the channel and help support our market share grow worldwide, I can get this kind of vital information. You can see this is the pattern that I told you way back in one of my original videos. Horribly produced, but highly informative, that has now got over 100 views. I think it's 104 views now, which is incredible from where it came from. But I said we were in a rising pattern. Let's delete that. Sorry, eraser tool, I couldn't bring you out for that quick one. But I said we were in this rising pattern. You pumped with the volume, and here, I'll go over this quickly again. At a different time frame, the same rules apply. We had a fake out up here to sucker some more people in that weren't paying attention to it down there, what we call the jabronis, right? That's why we made the jabroni killer. Here, we'll draw him. Jabroni's over here. He's the twin brother of the duck hunter, who his job is to be perched up, waiting to take down people at key resistance. Here's the jabroni killer. It's a shorter jabroni killer because it's a shorter time. Look how happy he is. Give him a little top hat, a beard because he's a jabroni killer, some feet, you know. Give him some kind of weird looking gun, and he's all set, right? Look at that. The jabroni killer is psyched in right to there. How about the reason the jabroni killer is there? Because none of these people are buying the hype. And again, our trading rule and future bumper sticker: pumping price, pumping volume, bullish, crashing volume after pump stops, and sideways and up consolidation. Change the color in our color changing department up here. Something you can see is a bearish topping pattern, often a sign that the buyers are being exhausted and the sellers are trying to take over the market. But you don't have to crash right away out of that. You can pump and sneak and fight and claw your way back in to suck as many people as you can before you fall, retest this new upper or underneath support, and then if you fail, you're coming all the way back to the bottom of the wedge. But that takes time. But that's what's going on here. And you say, well, what the fuck would a bullish pattern look like out of here? Well, the same thing. The pumping volume, pumping price together would be this bullish. Crashing volume is neutral. The only difference is you would like to see this, a downwards and sideways consolidation with the crashing volume instead of that upwards. See the difference? Because you would have wanted the trade like this to be a bearish pattern that probability based would break up, you know, but it still could have broke down before it broke up, just as this broke up before it's going to eventually break down to its target. But let's zoom in real quick. This is just a quick trading alert for a fellow subscriber that I hopefully is not stuck in this coin that he never wanted to be in, like the Doge community, that classic Saturday Night Live call that this company made and has built. It has built our company, really. It got us on the map with that call. It was a phenomenal call by this company, a very unpopular call on YouTube, but we were right. Now, if we look at here, anytime you see, again, rolling over volume, pumping price that's getting really jagged, with that jagged price, when you see a big pump up, crash 20 or 30%, big pump up, crash 20 or 30%, big pump up, crash 20 or 30%. That's often a sign of a topping blow off top pattern, and the market is giving you, the market's trying to tell you the pattern's going down, but it doesn't do it in a straight line. But these are things you look for pattern reversal, along with what we just talked about a couple minutes ago with the crashing volume up and sideways consolidation after a pump. Very bearish. So I would think in a quick time frame here, if we go to the 2 hourly to get some more sexy data points, I would say what you would be looking for here is the trade down. You could come back up to the overhead 200-day moving average. Then I think you're going to trade kind of sideways and down, retest this old rising wedge upper resistance is now, after you broke out of it here and did the pump, when it finally comes back down here in the next day or 2 or 3 or 4, you're going to retest this as short-term underneath support. And then it's up to you as a trader. Are you going to play a bounce back up to where the overhead 200-day moving average is going to be coming down to by then, which would be about right there? You could play that bounce. But I think you're touching. Let's clear this malarkey off. Hey, this gives us a chance to bring back the subscriber favorite eraser, checking in for another episode. But I think you're coming real quick. Like, subscribe, and share. Remember, if you take this advice, it helps you probability-based sidestep the criminal gangster. Yep, that's right. The Ohio State University criminal gangster cartel, fleecing and heisting the retail trader. I think the 250-day moving average is going to come over top like that, right? 50-day moving average is going to start coming up and then back down. And I think you're going to trade in the price sideways on it, come back and test, bounce back up into it, and then I think you're going to come back down. More likely than you're going to break up. But if you are to break up at a later date, if we see something change, I think you're testing this first. Then you can go make a new high if you're to make a new high. But before you make any substantial new high, I think you're retesting this underneath support. Like, subscribe, and share. Peace and love. Peace and love.